Okay, so I'm running over a trade on the Euro USD. So bias going into the week is still bullish. However, I'm looking for a sharp move down in the start of the week to create the low of the week. Quite possibly happening on today on Monday, but who knows. But I was bearish today because see this wick? This is the wick of the fair value gap on the daily in a nice 20-day IPDA data range. So obviously in a premium. And we see since Wednesday we bounced around this level. So this candlestick here I treat as a rejection block. And as you can see, it never goes higher. The bodies never go higher. We gap up on Monday, but that doesn't count as a body high, if that makes sense. So if we go down to the 15 minutes, so this blue line delineates the weekly open. So we come up above, come up, reject it, come up, reject it, and then the normal protractionary state would be if at 12 a.m. if I'm bearish, I want to see it rally higher to 1 to 2 standard deviations, but we rally higher and then roll over, and we still haven't made a higher high relative to the Asia session nor the central bank dealers range. So I missed this entry here on this order block and optimal trade entry. However, after this displacement leg, we create this liquidity. Now the liquidity pool would be 10 pips below. We can get 5 pips below, but that's if I'm wrong. 5 pips below and then reverse. So I trail the position out. I trail out of my position. So what I did was from the counter bodies, I looked for an optimal trade entry, and if you notice, on the 5-minute we have this lovely fair value gap within the optimal trade entry. And I took the position at the 7005 level at a macro, kind of a macro time, 3:30, still good enough. And then I take partials here, here. Then I take partials at the 1 standard deviation symmetrical price swing, as well as that lines up with 5 pips thereabouts. And then at 10 pips, so somewhere down here, and then the end target being this data wick. As well as that is 2 standard deviations lower of the central bank dealers range. So all of these things line up, as well as this Fibonacci retracement, the extensions -3 comes just below, so you can kind of see where it's going. Beautiful trade. Now I took more partials than usual because if we look at data, Mondays are usually a quiet day. We can have a spike if we have, say, weekend news or anything like that, any sort of volatility that can be pumped into the market. However, there was no news today. It was kind of a hit or miss day, so I lowered my size and took partials more than I would have. So you see this is a 6 risk to reward, but it's more likely a 3 considering partials. But still, absolute beautiful trade. Love to see it. 30 pips pretty much. Quick scalp in the London session. I'm happy with that, and I'll take it. I also attempted to take a trade on GBP USD. It looked a bit more convincing considering we took out this trendline liquidity and then we went lower. I was looking for an optimal trade entry as well, but you can see it's kind of a tight range here compared to here. More risk to reward on the euro. We come close to my limit order, but never actually hit. But I only took a trade on my live account on this because I can trade futures on the micros on the euro, and it's quite clear to see the price action. It pretty much is the same, whereas the GBP USD is different. I'd have to take that on my Forex account, but I was more confident in the euro. So this was on a paper trading account. This was taken on a live account. So yeah, brilliant trade. I'll see you in the next one.